Well, despite market weakness, the Yelp IPO is expected tomorrow, and we have Dan Gallagher from MarketWatch in San Francisco tell us all about this. Dan, this could be the last big IPO before Facebook. Tell us what's going on.
Well, I'm not sure about last big IPO, but certainly the last notable IPO in this internet, social media space that we're seeing. But Yelp is expected to price its offering tonight, a little over 7 million shares, right now at a price range between $12 and $14 a share. And that gives the deal a total value of about $100 million that they could raise if they price at the top end of that range.
And Dan, you mentioned that there have been some questions as to whether or not this actually was going to happen, given current market sentiment. Tell us the story there.
Well, when we woke up this morning, there were two other IPOs that were expected to begin trading this morning. A semiconductor company called GCT, and then another one called Provident Mortgage, a mortgage financer. Both those deals got postponed. In the IPO market sometimes gets a little temperamental. And deals get pulled, and sometimes companies, even in different businesses, tend to pull at the same time. So I decided to start checking to see if there was any talk that Yelp might also postpone. But the people I've talked to don't get that sense. The underwriters still seem to be pushing on to price this deal. Yelp is a very well-known brand. It's got a lot of visibility, so I think there's a lot of thought that they'll still do pretty well.
And is that because of the retail interest or the interest from retail investors that it will do well, and that sort of spreads the shares far and wide?
Possible. It's, what I've seen covering these things in the past is these companies that have a really strong consumer awareness, tend to get a lot of demand, at least initially out of the gate. The question, of course, with an IPO is, there's two ways to gauge a success. Is it a success if it prices above the range and gets the money that the company wanted to get for it? Or is it a success depending on how the trades go that first day and first week and first month, et cetera? And as we've seen in some of these past deals, like Groupon, like Zynga, LinkedIn, is that, getting a good pricing on that first day doesn't always follow that the shares will do super well, right after. They tend to be very volatile.
Dan, one of the questions surrounding Yelp right now, too, of course, is increasing competition in that same area. Google bought Zagat's last year, and now they're serving up restaurant reviews online. People look at a very small company like Foursquare, even, which recently partnered with a menu company to offer more menu offerings through its mobile application and website. Right, so people are just starting to see more and more people getting to this online restaurant reviews and online menus business. Now, of course, a few years ago, too, it was also reported that Google made a pretty big offer to buy Yelp, and Yelp walked away from that. So, I mean, what's the word right now? Are people saying, like, maybe they should have taken that offer and run with it? What's sort of the attitude towards Yelp at this time?
Well, it's certainly possible that there's some concern on that. Like you mentioned, there's big companies that maybe don't do exactly what Yelp does, but can easily move into that area. Yelp does have, they've been around at it for years now, so they have a pretty good brand awareness. But one concern is the fact that they are still losing money. After all these years in the business, they've seen their revenues grow up, but they're still in the red. So it's not really clear, is this a strongly profitable business that's worth investing in or not? It's one thing to have a very visible name, internet brand name on the web, but making money off that is something that not every company does very well.
And I think that is the key to being successful, actually making the money. I think you've hit upon something brilliant there. Dan Gallagher of MarketWatch. Read all Dan's stuff on marketwatch.com.